everyone, and welcome to Money Matters with Shannon Jackson, the personal finance show focused on moving you forward financially. On today's show, we're focusing on the financial strain that businesses and business owners are facing today. And it's no wonder. The past few years have really taken a toll, from the effect of the pandemic and subsequent financial recovery to high inflation and rising interest rates. The cost of operating a business has really skyrocketed. So data shows that more business owners are relying on credit to get by and to stay in business. We're also seeing many businesses close, unfortunately. According to the Office of the Superintendent of Bankruptcy, business insolvencies in Canada are hitting an all-time high. Now, joining me today to discuss the financial struggles that business owners are facing and offer some advice during these challenging times, we have Peter Naumis, Vice President and Licensed Insolvency Trustee with BDO Business Restructuring and Turnaround Services. Peter, thank you for being here today.
Good morning, Shannon. It's a pleasure, and thank you for having me.
Before we get into our discussion, can you just talk to us a little bit about your background and what exactly you do as a licensed insolvency trustee at BDO?
Sure. So prior to becoming a licensed insolvency trustee, I owned and managed my own business. So I'm fully aware of the stresses that owners go through on a daily basis. I joined BDO's turnaround and restructuring group in 2004, and ever since then, I've been helping companies restructure or wind down. Anything from a liquidation to helping them turn the business around because they temporarily hit a wall, let's say. To me, being able to assist owners to restructure and preserve their business means to preserve jobs, preserve family income, adding to the local economy, and helping them continue a legacy of the business for generations to come.
So you already have that personal experience from operating your own business, so you really understand what business owners are experiencing when they come and meet with you, it sounds like.
Sure, the struggles that they encounter on a day-to-day basis. Today is a little bit different, but there's still struggles when you operate a business.
So we're going to talk today about the struggle that so many businesses and business owners are facing right now. And what the data is showing is concerning. According to the latest statistics from the Office of the Superintendent of Bankruptcy, business insolvencies for the 12-month period ending July 31st of 2023 increased by 38.3% compared to the preceding 12-month period. Now, during this time here in Ontario, those statistics, unfortunately, are even higher. Overall insolvencies, now this is both consumer and commercial filings, they were up 40.9%. Bankruptcies rose 47.3%, and consumer proposals were up 24.8%. Now, the industries, it seems, that are most affected are accommodation and food services, retail trade, and construction. The Equifax Canada's latest Market Pulse Business Credit Trends report is showing that businesses are leaning more on revolving credit products to get by. And this data also suggests a pattern of credit expansion and a significant shift in credit usage, which of course indicates potential challenges for business owners. There is also other information from the CFIB's latest Business Barometer Long-Term Index, which measures the sort of feeling of optimism for business performance, and indicates that only 50% of the respondents feel any kind of confidence of what might happen over the next 12 months and whether there might be any kind of an improvement. And so it's definitely dependent, though, on what type of industry you're involved in. But it seems that most business owners here in Canada are not feeling very optimistic as they move into the near future. So, Peter, when you hear these statistics, what's your reaction? Should business owners be this concerned?
Oh, for sure. And all you have to do is turn on the TV or read the headlines. The Bank of Canada is increasing rates to a level not seen since February of 2001, which is something we're not accustomed to. This is all to help mitigate the high levels of inflation coming out of the pandemic. But, despite the aggressive interest rate hikes, inflation continues to be problematic. Bank of Canada recently released the August annualized inflation rate, which they reported at 4%. And this is a surprise to economists. It's a marginal increase from prior months. Previously it appeared that the interest rate hikes were taking hold and things were settling down, but it doesn't appear to be that way right now. All this is taking a toll on people's discretionary spending, which many businesses rely on. Additionally, this would seem to suggest that higher interest rates are here with us for a longer period of time. So not only is the consumer dollar not going as far, but customers are also being cautious on their spend. Businesses are paying more to service their debt and have potentially become more indebted due to various support programs like SEBA. They relied upon this, which they've relied upon that were offered during the pandemic. It's a tough environment out there right now with no immediate relief in sight.
Are you hearing this feedback from the clients and business owners that you're meeting with right now? Are they feeling these sort of challenges?
Yeah, every day they're frightened and not sure what to do. Things were supposed to be different once the economy opened up again. And while things are different, it's just not what everyone had envisioned. Business owners are looking for direction and advice. And unfortunately, as a result, they're losing focus on their business.
So it's important that we're all aware of the challenges that businesses are facing, because small and medium-sized businesses are really important to our local communities and our economy. The latest statistics say that there are 1.2 million employer-owned businesses in Canada. And the high majority of that, around 97.9% of those, are small businesses. Now, small businesses are defined as businesses that have between 1 and 99 employees. And then, of course, more than a third of those, about 36% of the country's small businesses, are located here in Ontario. And so in Ontario, the small businesses make up 97.7% of the whole workforce in our province. And so that's why it's really so concerning to see these surveys and reports that show the struggles that so many businesses are experiencing. And we know there is now the added pressure with respect to the repayment of the SEBA loans. We know many borrowers are getting increasingly concerned about their ability to pay back this loan by it was the former December deadline, but there has been some good news. The deadline has been extended for a period of time in order to repay that SEBA loan. So we're going to sort of get into this a little bit. So Peter, can you remind us a little bit about what the SEBA program is for business?
So back at the inception of the pandemic, when businesses were forced to close, the federal government stepped in with financial support through the Canada Emergency Business Account, or SEBA as it's known, which was administered through various financial institutions. The program offered interest-free loans up to $60,000 to small businesses and not-for-profits. Nearly 900,000 businesses applied and were approved for the SEBA for a total loan value of $49 billion. Those in good standing are able to repay the loan by the deadline and apply for up to 33% forgiveness. That's either the $10,000 or the $20,000. You must note that the forgivable portion of the SEBA loan is taxable. Okay, so you should talk to your accountant about that if you're able to do that and the hit on your taxes. Originally, these loans were to be repaid by December 31st, 2022. However, that deadline's been extended twice thanks to the advocacy of the Canadian Federation of Independent Business. The current deadline to repay the forgivable portion is January 18, 2024, after which none of the SEBA loan will be forgiven and interest will begin to accrue at 5% per year. The SEBA loans are due to be paid in full by December 31st, 2026.
So speaking about the growing concerns of business owners when it comes to paying back this SEBA loan, because many were worried about meeting this deadline, which now you've just talked about being extended. Can you give us a little bit more details about this extension and what business owners need to know about it?
Sure. So it was extended from December 31st, 2022 to December 31st, 2023, and then they provided an additional period of time to repay it. If you're able to do that, the $10,000 or $20,000 is forgiven. They've also provided a further extension on the SEBA loan for businesses that are in discussions with their banks to refinance the SEBA loan. That further extension is March 28, 2024, subject to the business and the bank getting into an agreement to refinance it. And while the interest rate may be higher than the 5% that the government is offering, businesses will benefit from the forgivable portion of the SEBA loan.
So there's still concerns in business owners. Some believe that the extension fails to address the most critical issue on outstanding loans, and that is the loss of the $20,000 forgivable portion for those unable to repay the loans by the deadline. And of course, you said that the Canadian Federation of Independent Business has come out and said that the extension is of very little value to small business owners who just don't have the money to repay. What are you hearing from clients right now about this particular CEBA program and the repayment?
Yeah, it's exactly what the CFIB is reporting. Businesses just don't have the ability to cover the 40 or 60,000 owing at this time. They're struggling to pay basic overheads like rent, wages, anything to keep the doors open, not to mention the higher costs of borrowing, inventories, material. The CEBA loan was a lifeline to many operators in a difficult time. Now it's becoming a hindrance on their businesses. We receive calls on a daily basis regarding CEBA, the anxiety owners are experiencing, and the looming deadline. Business has not recovered to pre-pandemic levels. Owners need more time to focus on their business to get back to pre-pandemic levels before they can even start thinking about repaying $40,000 or $60,000. And while the 5% interest rate may seem attractive in today's world, with a 3-year payback period, that's a potential hit of $1,800 a month on business cash flows.
It's a huge amount in the cash flow, especially for small businesses that are struggling right now. And so with this concern about this repayment of this loan, I think a lot of business owners are wondering if they do need to close the doors, is it going to affect them on their personal finances? So to your knowledge, is there a personal liability associated with the CEBA program?
Yeah, so we've handled our fair share of CEBA-related restructurings and insolvencies. And, my advice to anybody that comes to me is if it's your corporation that applied for it and they're eligible for the CEBA loan and they used it as it was intended, there is no personal attachment. Now, however, if you applied as a sole proprietor or a partnership, then that's you in your personal capacity applying. And my opinion is that you would be personally liable for that.
Yes, that's been my experience as well with people that I've spoken with just on the consumer side. If they're just a sole proprietor and they made that application under their sole proprietorship, that there is that personal liability associated with that. And so I agree with your opinion on that. And so as we know, tough times are happening right now, and it's important that business owners remember that they do have options and there are solutions out there to help them during this time of uncertainty. And Peter's going to tell us about those solutions after the break when Money Matters returns.
This program is brought to you by Ignite TV. Now you're in command. Visit Rogers.com for more details.
Hey, man. Want to go for a ride?
Sure. Toss me a life jacket.
I'm gonna need this. Gonna need this.
Nope.
Gonna need this. And this.
I think we should stay here. I thought you used to play ball.
Focus better.
Partner better.
Sleep better.
Breathe better.
Love better. Work better. Friend better. Unwind better.
Everything gets better when you get active.
Welcome back to Money Matters with Shannon Jackson. My guest today is Peter Naumis, Vice President and Licensed Insolvency Trustee at BDO Business Restructuring and Turnaround Services. And we know that there are a lot of economic uncertainties right now. There's continued fallout from the pandemic. High inflation, rising interest rates are taking a toll on the finances of Canadians. And just as consumers are feeling it, businesses are also feeling the pinch as well. And as we've been talking about, businesses are leaning more on credit to cover those costs. And unfortunately, business insolvencies are on the rise. And as we talked about before the break, small and medium business owners are getting increasingly concerned about their ability to repay their CEBA loan, even though it has been extended a couple of times to help them out. Now, the data shows that there's no doubt that these are challenging times, but for business owners who are watching, those who might be feeling stressed or worried about whether they might have to shut the doors, it's important to know that there are solutions. And that's what I really want to focus on in this second segment. So, Peter, to start off, what are some of the warning signs that your business might be in trouble?
Sure. So that's a great question, and not one that many people want to think about. There's any number of warning signs, but I'm going to narrow it down to the four key signs that people should pay attention to. First one is cash management or cash flow problems. Some of the signs to watch for are aging receivables, suppliers requesting COD for purchases, inability to pay creditors or obligations, CRA obligations on time, avoiding creditors, and increasing reliance on credit to make ends meet. The second is lack of profitability. Some leading indicators to keep an eye on are continued monthly losses, slowing growth, and declining gross profits. Third is a key one. It's the use of trust funds to fund operations. Operators forget that payroll source deductions collected from employees and the HST collected on sales is not the property of the business and are not to be used in the day-to-day operations. However, when times get tough, this is most often the first place businesses turn to. These funds are trust funds which have to be collected, or which you have collected on behalf of the government. Use of these monies to fund operations is highly discouraged. Not to mention, these liabilities are director liabilities which carry a personal obligation. And the fourth is an owner not taking a salary. When times get tough, owners resort to working for free. Good intentions, but if it's prolonged, this is a sign. In addition, not only are owners working for free, they often find the need to recapitalize the business with personal money, putting good money in after bad. I'm not saying this is always a warning sign, but you need to ensure the personal money you put in is a means to an end and not a band-aid solution.
Unfortunately, you see this so often because business owners want their business to be successful, especially if they have employees who are relying on that income. You'll often see business owners just not pay themselves in order to have that business continue to operate. And it's understanding because we want to be successful in the businesses that we operate in, especially if we want our employees to stay employed. So it's definitely challenging when those cash flow issues come up. It's often, like you say, one of the first things that might happen is you're not paying yourself as part of your company.
Yeah.
And so for business owners that are experiencing maybe some of these warning signs, should they be talking to a licensed insolvency trustee?
Sure. I mean, it's never too early to call a trustee to explore your options or any of the professionals in your group, such as your accountant. Okay, we deal with these things on a day-to-day basis and can help you. It can be too late, though, if you cross a point of no return. So, in my experience, over the years, the hardest thing that business owners have is to acknowledge that their company is struggling and having financial difficulties and they may need help. Pick up the phone, give us a call. Let's go through everything, assess it. The initial consults are free. There's nothing to lose, and you may come out that much wiser.
So it sounds like reaching out to you sooner rather than later gives you a few more options that might be available. Would you agree?
Correct. Once you cross a point, there's no return. So if we can catch it before that point, then there's always a viable option to turn it around.
Does it matter what the size of the business is?
It doesn't matter. We've dealt with businesses anywhere from a one-man shop to a multinational corporation. Having debts of $75,000 to millions of dollars. It doesn't matter. Can
you walk us through what a business owner can expect when they come and meet with you? What is that initial meeting like?
Yeah. So when we meet, we sit down and we discuss the history of the company, how the problem came about, and basically what they want to achieve through a licensed insolvency trustee. that involves looking at the company's finances, cash flows, assets, liabilities, how we can try and restructure a business, and what the available options are. And they're not always a formal option. Sometimes it's just, hey, you know what, here's something you should do on your own. Go out, give it a shot. If it works, great. If not, keep me apprised, and we can always come back and look at some formal options. You know, sometimes it just requires some operational optimization or economies.
I like that you said there that it's dependent on what the business owner really wants out of the outcome of the meeting. So I think it's maybe, if you would agree, it's important to sort of gauge where the owner wants to go. Do they want to continue to operate? Or maybe they're thinking that it's time to wind it down. I think it's important to take that in consideration for the client. Would you agree?
Yeah, oh, exactly. So, you know, a lot of these business owners are very proud, and they can't admit that something is no longer what it was in the past. So, you know, the first thing is this company viable going forward? Is the business viable? Do you have the energy to continue with it? If not, there's no use trying to restructure. Then we look at the other options. And maybe, like you suggested, it's time to get out. Let's figure out how do you get out and capitalize on the value of the business for the benefit of your family.
Let's get into a few more details about what some of those options might be. So if somebody comes in to meet with you, what options would you talk about with them?
Yeah, there's two main options that we deal with, and one is a bankruptcy, and the other is a proposal restructuring. These are both formal options under the Bankruptcy and Insolvency Act. A bankruptcy essentially is the last avenue to pursue when you've exhausted all other alternatives and determined that the business is no longer viable. In a bankruptcy, it's basically handing over the assets of the company to a trustee for the benefit of your creditors. The trustee then sells the assets, whatever money it realizes on, it splits it with the proven creditors. Unlike a bankrupt individual, a company will not obtain a discharge from bankruptcy unless they pay all their creditors in full, which I've never seen. The bankruptcy puts a formal end to the business. It's, you know, that may benefit owners by ending the ongoing stress they're experiencing and allowing them to move on with their lives and put this experience behind them. The other one is a proposal. Proposal is a formal plan to restructure the balance sheet of a company and compromise unsecured liabilities, including CRA debt. Many people aren't aware that you can include CRA debt in any compromise. The effect of this is that the company comes out the other end stronger, leaner, and business continues to be viable. Proposal has many benefits, including a stay of proceedings from any and all legal actions. It lifts existing garnishments, it lifts bank account freezes, and can potentially offer protection for directors of the company. The one caveat is, like I said earlier, you have to catch it at the right time. If the company goes past the point of no return, a proposal is not going to help out. Okay, we've helped many business owners over the years restructure their company successfully, and they've moved on very successfully and had great businesses.
It sounds like the proposal option is really meant for those business owners that they do have that viable business. They just need a readjustment with the cash flow a little bit, make a negotiation with the creditors, and they can carry on from there. Are you finding that there are more businesses doing proposals right now as opposed to bankruptcies?
For sure, for sure. I mean, you know, we've gone through some tough times in the last 3-4 years. You hit a wall. There's an issue there. The business is a good business. It's just, it's tough to come out of what we've come out of. They need more time. The proposal allows for that. Restructure, it gives you an ability to budget because you know each month. So the proposal basically suggests that you're going to pay X amount of dollars over a period of time to compromise the creditor claim. So it allows you to budget properly going forward. You know what you have to pay. So long as you continue to pay your obligations that are due after you file the proposal, because those creditors after you file continue to be a company's obligation. So it gives you more time, it frees up your cash flow, and you meet with the trustee and you assess your cash flow and you work on how to make it more efficient. How do you streamline? What do you need to do? You can restructure any way you want. Get rid of unfavorable leases, move anything that's holding you back.
It sounds like it's a very collaborative process putting together a proposal. Would you agree with that?
For sure, for sure. So you have to dedicate time. You're going to meet with a trustee. We're going to review the finances, the assets of the company, cash flows. We'll assist in coming up with viable cash flows that show that a proposal can be supported and where we need to cut. There may be some weight that we have to let go and we have to cut that. And then it's pitched to the creditors. It's a transparent process saying, here's the cash flow, here's what we're proposing, here's my assets and liabilities. The creditors review that and they make an assessment whether they want to accept it or not. If they accept it, great, we move on. If they don't, the caveat is that the company's bankrupt at that point in time. But there's always negotiation that can happen and there's always a workout.
It's encouraging for me to hear that most of the businesses that you're meeting with are in a position that they can restructure and continue to operate. To me, that sounds like good news for our community economies, but also for the greater economy of nationally across Canada. It's also good to know that it isn't a top-down sort of process. When you meet with a licensed insolvency trustee, it's a discussion about how you're going to work together through the process. So I think both of those things are really encouraging things to hear. Now, unfortunately, we're about to run out of time, and we've had some really great information come out in our discussions. Peter, do you have any final advice for our viewers?
For sure. You know what? Hang tight. Don't be too proud or shy to seek advice. Do it proactively rather than retroactively, and don't ignore your creditors or CRA. That just gets them more anxious. Like we talked about earlier, it's never too late to start asking questions, and that means your accountant, your lawyer, an LIT. You might just be surprised at what can be done.
Struggling right now with their businesses and they want to reach out to you, how can they do that?
Sure. They can call me directly at 905-615-6207, or they can email me at pnaumis@bdo.ca. That's PNAUMIS@bdo.ca. And, I would direct viewers to our website, www.bdo.ca. There they can navigate all our different service lines, including our business restructuring and turnaround services, our personal debt services, all the partners and offices across Canada. We're coast to coast.
Peter, thank you so much for being here and taking the time to share your advice. And I also want to thank you, our viewers, for watching. Until next time, I'm Shannon Jackson.
Call the Rogers TV Viewer Response Line. Email us or connect with us on social media.
Today, I helped a senior find transportation to an important medical appointment.
Today, I helped a new mom find virtual programming so she didn't feel so